Hey everybody, this is Alan Brockstein from New Cannabis Ventures, and we're here today to talk about some of the opportunities ahead in the California market. This is one of the biggest changes to hit the legal cannabis industry ever, and we're sitting right in front of some rules that are going to come out. Nobody knows for sure exactly what things are going to look like, but what's called the sixth largest economy in the world, California, will definitely be implementing regulated medical cannabis after 20 years of being the Wild West, and with a goal of, at the same time, implementing a legal framework for adult use. So what we decided to do today is to bring three of the leading companies in the publicly traded space, which together had $13 million of sales in the quarter ended June 30th, to talk about kind of what they're doing in California now and how they envision things changing and how they're positioning their company for these changes ahead. In alphabetical order, we have the first one alphabetically is Kush Bottles, Nick Kovacevich, the CEO, and just for reference, they reported sales of $4.72 million in Q2. We have Dennis Forchic from Solis Tek, the CEO of Solis Tek. They reported $2.44 million in the quarter ending June 30th. Both Kush Bottles and Solis Tek are clients of New Cannabis Ventures, by the way. And we're also joined by Derek Peterson, the CEO of Terra Tech, which reported $6.05 million in sales just from cannabis in Q2. So what I'd like to do is allow each of our presenters today to give a quick introduction, and then we'll get into the Q&A. So let's start with you, Nick, since we're going alphabetically. Tell us a little bit about, I think most of our readers and listeners are familiar with you, but tell us a little bit about what Kush Bottles does.
Thanks, Alan. Nick Kovacevich here. I'm the CEO of Kush Bottles, as Alan mentioned. We trade publicly under the symbol KSHB on the OTC markets. Kush Bottles was founded in 2010 in the state of California with a mission to provide ancillary products for the cannabis industry. We provide everything from packaging to hardware, vaporizer products, glass pipes, everything ancillary. We don't touch any THC at our company, and we provide these products primarily to businesses in the cannabis industry, so everyone from the growers and the producers to the extractors and manufacturers, all the way to the retailers and medical cannabis dispensary operations. And we service all the legal states in the United States and Canada, and also some international markets with these products, and we service it out of our facilities, of which we have 4 that we own and operate, 2 in California, 1 in Washington State, 1 in Colorado, and then we use exclusive distribution partners in Alaska, Hawaii, and Puerto Rico. So we're basically a products and services distribution platform for the cannabis industry, focused on all the legal markets, but headquartered in California.
Great. And Dennis Forchic, the CEO of Solis Tek, why don't you tell us a little bit about Solis Tek?
I will. Thank you, Alan, for the opportunity to be here today. I appreciate this chance to speak to everyone. I recently joined Solis Tek as the CEO this year. Solis Tek is entering its 9th year in the cannabis industry. It's one of the most tenured lighting companies in the space. We are based in Carson, California, right outside of Los Angeles, and we trade as well on the OTC, on the QB. Symbol is SLTK. As we enter 2017, and the industry knows us as a lighting company, and that's what we've been providing. But the structure of our organization is a Nevada-based holding company that owns multiple subsidiaries. The one that the market knows the best is the lighting company. We are in the process right now of launching our second wholly owned subsidiary known as Zelda Horticulture. It's a nutrient division, and we've been testing products for the last year plus, and we'll talk a little bit about that today as well, specific to the state of California. But combined, as we go forward, our growth to date has been organic. We have a broader business model that we're initiating as we go forward as well. So currently, we're selling to hydroponic shops throughout the country. We have over 500 retail hydroponic shops that are part of our recurring network of orders. And we also sell to the legal commercial sites throughout the country that we've been working with as well. So Combined, we're on track to continue what the founders have started. We're bringing together a solid team as Alan Lean and Alvin Ho, the two founders, bring on some additional management. And as we go through this, we're extremely excited about what we have ahead.
And I think, Derek, you've been around the longest. I think Terra Tech's been trading since 2012, if I'm not mistaken, maybe even 11. But tell us a little bit about it for anybody that might not be familiar.
Hey, Alan, thanks for having us on. Yeah, I think it was early 2012. We're traded under the symbol TRTC. We're on the OTCQX. We have a couple different business segments. We have a traditional agricultural side. We operate a 250,000 square feet of Dutch-style greenhouse in the Northeast under a brand banner called Edible Garden. And we're mainly just growing leafy greens, so red leaf lettuce, green leaf lettuce, those types of things, different herbs, and we sell those through Walmart, Kroger's, Marsh's, ShopRite, major retailers throughout the Midwest and the Northeast. And we're beginning to migrate that brand out to some other markets towards the West Coast as well. So that's traditional ag side. On the cannabis front, we operate multiple retail dispensaries in both Nevada and California, as well as cultivation facilities and production labs. So we're vertically integrated in the California market, vertically integrated in the Nevada market. We push a retail brand called Bloom and a wholesale brand under the moniker of IVXX, which is the Roman numerals for 420. So our kind of focused growth on a go-forward basis, obviously, is to continue to expand the retail Bloom brand as well as continue to penetrate both marketplaces with the IVXX or IVEX brand. And California, obviously, coming from somewhat of the Wild West to a more regulated marketplace is going to be a significant change, but it's also, from our purview, a significant opportunity to grab and continue to expand more market share in the California region.
Okay, great. So I think our audience probably appreciates that we've got a big part of the supply chain covered here from in both sides of it, the ancillary and direct. So hopefully we'll be able to emerge on the other side of this conversation, understanding a little bit better about what lies ahead for California. And I know all you guys covered it a little bit, but I'd like to drill down just a little bit into your specific California operations. And we'll start again with you, Nick. I know that you said that you have two facilities there, and obviously you're headquartered there and you live there, but can you talk specifically about what your California operations represent to your overall business? I know you've disclosed that percentage-wise in your 10K historically.
Yeah, I mean, our business here in California is, very exciting with all the changes that are happening in the market. We've been here since 2010, so we know the market very well. We have great relationships with a lot of the key players, but we're expanding and evolving as the market is. And so currently we have two facilities, our headquarters in Santa Ana. We purchased CMP Wellness or MetaPen on May 1st. Their facility in Lawndale outside of LA is now under our purview as we've kept that intact and kept a team there. It's a smaller facility. We recently signed a lease to move to a much larger facility than the current one in Santa Ana, which is right down the road in Garden Grove. And we're currently in the construction phase and should be in that facility fully integrated by the end of the calendar year. So as far as our physical footprint, it's continuing to grow here in California. As far as the market goes, we're seeing obviously more sales as more players are moving into the market ahead of what's expected to be a huge onslaught of business when adult use cannabis and more importantly regulation comes into effect. And we've hired ahead of that, so we have now 5 territory sales managers covering the state of California. 2 of them are in Northern California, 3 of them are based in Southern California. And we're expecting a shift in the market as now a lot of the cultivation operations, the majority of which are based in Northern California, are going to start to really brand and differentiate themselves and pre-package their goods. So we're shifting from a market where we focus more on dispensaries, where the highest volume dispensaries have been in Southern California, to now servicing more cultivators, which again the larger majority are typically in Northern California. So we're seeing that shift into effect. But the big thing for us is really the regulation, and specifically around packaging, as that's really a core focus of our business and always has been. California, even though it's been disclosed as about a third of our business historically, has never had regulation in regards to packaging. We've always competed against Ziploc bags in the state. We saw a huge increase in business in Colorado in 2014 when they shifted to adult use cannabis and they shifted to strict regulations around child-resistant packaging. We know California is going to have child-resistant packaging as part of their regulations. That was voter approved back in November. However, the specific nuances around it are still to be determined. So we know there's going to be regulation around packaging. We know it's going to require some sort of child resistancy. So we're preparing for that. We know that based on what we saw in Colorado, we should receive a huge influx of business based on people needing to become compliant that currently aren't operating compliantly. But again, the nuances are still to be determined. So we're very excited. We're preparing in the best way that we know how, and we are just leaving it up to now the regulators in the state to get the program in motion.
And Dennis, I don't know if you're allowed to break out your California, but can you give us a sense of how big, how important California has been to Solis Tech historically?
Certainly. The idea that the company has been here almost a decade, based in the Southern California market, just by default, the most extensive network of relationships we have are within the California, the state of California, and it's just by the proximity and where the focus has been, and that includes both on the commercial side as well as the retail side. As one of the larger capital expenditures from a cultivation site early in the process, once their facility is up and created and they start to look at the lighting aspect, we are typically one of the people we're talking to. So even if it doesn't lead to a consummated relationship on a sale, we have relationships with the majority of the guys that are out there. We're in touch with them, we're talking to them, we're getting to know who they are. And that bodes well as we continue down the line with the second division of the Solis Tek umbrella on the nutrient side, because we're back in touch with them now on a more of a on their daily feed portion of their growth cycles, et cetera. So as we look at what's happening, and it's what Nick touched on, you have to be proactive in any business, and certainly in the cannabis industry that we're in, we've got to be able to be reactive as well. We're conducting commerce with statutes that aren't regulated, aren't finalized yet. So we're always balancing that as we go forward. And as we look at California, we're expecting, as many industries in California, as the guidelines start to establish themselves and finalize and the statutes are presented, our feeling is, if on the nutrient side, if we're within the guidelines on all the regulatory issues, that will bode well as we roll out with our products as we head east with the legalization movement as it continues eastward. And the reason that's important, we're not per se, Alan, doing anything different in California than we do elsewhere, but our expectation is that what California does will have impact on the rest of the industry. So we want to make sure that we are in front of those networked relationships we have. We are constantly visiting them on a regular basis. And I should reference this, Solis Tek, like Kush, does not physically handle the plant. So we are coming into the industry from the picks and the axes, the tools of the trade side, and the ability to make sure that we are as up to speed on the statutes and yet to be determined statutes. We feel that if we position ourselves properly here, that'll bode well as we continue eastward. So by far the largest network of hydroponic retail shops, our clients in California, as well as the cultivation relationships also. That's where we stand currently.
Okay, and Derek, you did a pretty good job of talking about your California exposure, and I don't know if you mentioned San Leandro, but maybe you could spend a little bit of time here really drilling down what you're doing specifically in California right now.
Yeah. California is obviously important. I mean, you mentioned it's the sixth largest economy on the planet, and one thing that, say all three of us, Kush Bottles, Solis Tek, as well as us, have to deal with is lack of economies of scale in this industry. And what I mean by that is the packaging requirements, for example, in California are not the same as they are in Nevada, aren't the same as they are in Florida, aren't the same as they are anywhere else in the country. So, what we deal with from a kind of a macro standpoint is lack of economies of scale. So normally companies will be able to build a consistent product and distribute that consistent product. We are not able to do that. That for guys like Kush, that means perhaps different molds and those types of things. For us, it means different ways we market, advertise, and approach and consummate our sales process. And that gets tricky, right? So that there's an expense associated with that, with lack of economies of scale. But fortunately, California, as large as it is, again, 6th largest economy in the world, we actually have an opportunity interstate to get some economies of scales in the different areas of business that we're conducting. So that's, I think, one of the reasons why California is a standout marketplace versus some other governments around the country. One place that we're different, where we're actually different than Kush Bottles and Solis Tek, is, again, we actually touch the plant. And so, for the last 20 years, California marketplaces, we've heard, has been a bit of the Wild West. So what that essentially means is they essentially passed a piece of legislation that just said, hey, you can sell, cannabis to consumers. And they allowed the entrepreneurs to ultimately define what that looked like. And then municipalities started to jump in and define local rules and regulation through zoning, through legislation, and that type of thing. But for the most part, the industry for the last 20 years has been defined by the entrepreneur here. Walking into 2018, it's a huge paradigm shift. Now we're going from entrepreneurial-directed industry to one that's going to be mandated legislatively with very defined rules and regulations. So it's going to be going from somewhat of a gray market to a relatively black and white market. And one of the biggest concerns for us that's always plagued us is that gray market or black market operator and competing against that. And that's not something that Nick and Dennis had to worry about is people coming to the marketplace with packaging or electronics. But what we worry about and have worried about is people that are able to sell cannabis through dispensaries that aren't permitted, aren't licensed, they're not having the same corporate burdens that we are of payroll and taxes and those types of things. So it's been a bit of a challenging market for the people that actually want to be standout, legitimate, and transparent operators in the state. And we're coming to this legislative change for us, and we actually think it's going to be a big boon for people that are actually able to maintain, inside that environment from a compliance and regulatory standpoint. We actually think there's going to be a tremendous amount of consolidation in this space because there's a lot of people out there that aren't able to maintain the business that they're currently doing and the business that they've done in the past in something that's going to be that complex. So we think there's an opportunity to grab market share coming into those changes over the next couple of years, and we think there's an opportunity for companies like ours to stand out. And what we've built coming into that is an expanded cultivation footprint, continuing to build an expanded retail footprint. So we've got a retail store in Oakland, but it's actually a cannabis campus there where we actually have seed to sale. So we have cultivation, extraction lab, and retail on about a 1-acre campus in downtown Oakland. That's been a great footprint for us to kind of test the market, build infrastructure, build a sales team. And like you said, we won a permit in San Leandro, which is about 40 minutes south of Oakland. We're opening up an additional retail store there, as well as an additional lab to continue to push out the IVXX or IVEX brand. So to us, the biggest opportunity in the space is to build out what we call kind of a homogenized approach to retail, where a consumer can walk into any one of our stores in Nevada, California, and have a consistent experience, have a consistent menu board and offerings, and get a consistent product and consistent customer service experience day in, day out, location by location by location, which isn't something that the industry's basically used to at this point. So we're excited to bring that as a potential offering to consumers in the upcoming years on a go-forward basis. And then on the IVXX brand, same thing there. With the breadth and scope and the size of this state, not only from its existing population, but also from the tourism that comes into the state on an annual basis, we think there's a huge opportunity to push the wholesale brands, not only through our own retail footprint, but obviously through the other permitted dispensaries that will be occupying multiple markets in the state as well. So we're really just adding to cultivation footprint. We're building a new cultivation space up in Oakland. We've just added a contract farmer up in the Humboldt area, and we're continuing to expand our retail and cultivation footprint in California. Just because, again, if we're going to focus on a certain state, why not focus on the 6th largest economy where we can actually adapt and incorporate some economies of scale and have a smoother business from a macro standpoint?
Great. So as we're recording this today, which is September 7th, and we're in the first week of the year, and so anybody listening to this now or certainly in the future should be aware that this next question is posed in front of news ahead that we don't know yet. And so I wanted to start with you, Dennis. As Solis Tek thinks about how things might change in California, what do you think are some of the important changes that you foresee from the state of California from a regulatory standpoint?
Well, I'll touch on with this, and I'll pick up with what Derek said. I'll begin with that. Derek, although we are on the non-touch the plant side, a lot of the aspects that you're dealing with parallel both Nick and our company. And for example, you touched on the idea of multiple states with perhaps different regulatory issues regarding the labeling. We have a product right now, for example, that we're selling into multiple states. It sits in our warehouse hypothetically as one SKU. If we have to start creating labels specific for various states, that one SKU becomes multiple SKUs. So your cost, your internal cost, your overhead, et cetera, your COGS, your cost of goods sold are impacted by it. So the idea that the regulatory issues are not consistent at that federal level, you've got a state-by-state autonomous aspect to what you need to do, burdens companies that sell multiple states, not in the same way that Derek referenced his are, but at the same time, Nick may have labels for a product in one state that needs to be altered for the next, and we now go from one SKU to perhaps a dozen plus SKUs for the same product, but making sure that regulation-wise we are in accordance with each of the state-specific guidelines. As California comes on, regarding the question that you just asked, Alan, our hope is that as the sixth largest economy, and as if you read what the regulatory issues are that the state is looking at now, we're going to see things, I believe, in the state of California that maybe haven't been as specifically addressed in the other states. We're going to come out of California with something regarding water usage in this industry. We're going to come out with the obvious pesticides. We're going to come out with how we represent something being organic with OMRI. If you are organic in California, although there's no perhaps official reciprocity across the rest of the country, if you want to pick a state, as Derek said, that you might as well try to be in accordance with, California is probably the logical choice, because the idea that you fit the statute in California as the legalization rolls eastward, it's going to be a more efficient process to fit the regulatory requirements in those additional states. The other aspect, and I couldn't agree more with what Derek just said regarding I see it as a barrier to entry. Our feeling is we've been here 10 years. If we're going to do something, we need to do it the right way. So we're putting an incredible focus, a disciplined approach, the cost required to make sure that we're following these statutes so that our clients are in accordance. They have the confidence that as they acquire our products, they know on a consistent basis that they're going to be in line with what they're burdened by. That more restrictive regulatory process we view as a positive, because if you're coming in with certain parts per million that require, on the fertilizers, for example, a certain amount, a certain threshold that you can't exceed, the more restrictive, the more barrier to entry for the new companies coming in. And, nutrients, put some salt and water together and you can represent yourself as a nutrient. Whereas if we're in line with the states, we're following what's being proposed, we're in front of the statutes that are coming out, it's harder for an influx of additional business to come in. And in effect, even though they may not be here long term, they're compromising margins, they're driving down price, they're dissipating the landscape with more alternatives. So we're excited about the idea that as this regulates more and more, it's going to create a barrier to entry. And then finally, and I'm going to again agree with what Nick said, from an M&A perspective, there are a lot of companies operating in this industry that, quite frankly, are here, I believe, simply because the state and federal statutes don't align. And because of that, the barrier to entry to the bigger players that are not here, we've got a $6+ billion industry last year that has, for the most part, one Fortune 500 company participating in it with the Hawthorne Group. Yep. Other than that, these players are sitting on the sideline waiting to come into this space, but they're not going to be able to do so at the level they want until the state and federal alignment occurs from a statutory regulatory perspective. And that creates a runway for companies like ours, all of us, to spend the next 3, 5, 7 years, whatever that timeline may be, to not only grow organically, but just like Derek just touched on, even though the regulatory issues are coming in and making things more clear, there are a lot of companies that have been operating that may be cash flow positive, they've got accretive potential from an M&A perspective, that as they have to refine their processes, they're going to look to perhaps some alternatives, and those alternatives may be any one of the three of us talking to them about sort of the merger and acquisition opportunities that are out there. So to summarize, we need to be in front of what's being presented. We need to be able to react to what comes out as well as prepare in advance. And then we need to make sure that we keep a broad, balanced perspective from a business opportunity standpoint, because the opportunities of that regulation, I think, are positive for all three of us on this call right now.
Derek, what are some of the important changes that you guys think or that are monitoring most closely?
For us, it's all the things that Dennis had just touched on. For us, it's the one differentiating factor between us and some of the other people is, again, we touched the plant, and it's that gray market provider is a really, really challenging, opportunity for anybody that's trying to operate more overtly in the space right now. And I'll give you an example. We're headquartered down here in Irvine. I think, Nick, you're over in the Santa Ana area. So Santa Ana is a permitted dispensary city down here in Southern California, but you can literally go into Santa Ana and rent a strip mall shop, so a couple thousand square feet, and open up a gray market, black market dispensary, put up major signage, and probably continue to operate for 3, 4, 5 months before anybody comes in and shuts you down. And what you're finding is a lot of these kind of gray market, black market growers are doing that. They're actually using it as an opportunity to liquidate their what otherwise would be wholesale product at some quasi retail pricing. So they get a great economic return. They don't have the same burdens and overhead. So competing against that existing black and gray market has been a challenge for us in the California marketplace. So literally just the adaptation and implementation around increased regulation and compliance is going to be a huge pivot point for us, because again, we're a publicly traded company, so we have all those burdens of being a pubco, the audits, the compliance, the SOX 404 that we're used to. In addition to that, we operate in the Nevada marketplace, which is a very restrictive seed to sale marketplace from an operational standpoint. So that's a core competency of ours. We're actually looking forward to what other people are fearing right now. We're looking forward to not only the implementation, but more importantly, the enforcement of these new regulations, because again, we just think there's going to be a tremendous amount of people that don't have the bandwidth to be able to compete in that marketplace, which again is going to mean a migration of business or a consolidation of business into a smaller pool of providers over the long term. And we intend to be a large inheritor of that market share. So that's really, more than anything else, the stimulus associated with not only adult legalization, but expanded medical, but the real adaptation of stricter and tighter rules and regulations, which most entrepreneurs fear. This is that oddity that we're actually inviting. So that's going to be a huge boon for us. And again, to touch on what Dennis said, I've said that publicly before several times, that this bifurcation between state and federal laws, as irritating and complex as it is from an operational standpoint, we aren't necessarily in a hurry to have sweeping federal change right now, because the Constellation brands, the big tobacco, who knows that's ultimately going to come into the space. We don't want that to happen at too premature of a level until we've really built out significant size and scope and have significant brand adherence and penetration. Once that happens, then I'm happy to have the potential acquirers and potential additional capital come into the marketplace. But this has really, created a bit of an incubated environment for all of us to take some time and energy with the big boys in the barriers to entry, keeping them at bay to, again, execute in our business models and build our plans out. But the adaptation implementation of the regulation by far is something that we're the most excited about in the California marketplace, because we think that's going to be a huge catalyst and inherit additional market share.
And Nick, I know you're really excited because we talked about that on the webinar, but what are some of the changes that you see potentially in the coming weeks out of California with respect to packaging, I guess, specifically?
Well, like I mentioned, the Proposition 64, which was passed in November of last year, did call for child-resistant packaging, and it wasn't clearly defined, and it's up to the regulators really to figure out what that exactly means as it relates to actual practice, because there's multiple ways to accomplish child resistancy. You can make something that's one-time child resistant in essence something that an adult would need to open with scissors, but after that product is opened, now it's no longer child resistant. So some states have shown that they like to make these products reclosable into child resistancy. So we don't know where the state's going to land on things like that. If larger format exit bags are going to be a viable solution, that you could take non-child resistant products and put them into a larger exit bag, and now you're all of a sudden compliant, like is the case right now in Nevada and Oregon, but not the case in Colorado. So a lot of those nuances do need to get figured out, but we're confident in the state's ability to regulate. We were pretty surprised to see the CEQA report already get done for California, and that was, I believe, anticipated for November. So it looks like they got that done early. So they're making some good inroads, which, to Derek's point, is great for people that are doing business the right way. And I think that there will be a lot of windfall in business for folks like Terra Tech that are used to operating in a compliant environment, already dealing with regulations as being a public company. Now the state is going to implement these strict regulations that the competition simply won't be able to adhere to as well as a company like Terra Tech that's already been doing it and is used to it and has built practices around it. And so, we're seeing, companies like Terra Tech coming to us and getting ahead of the curve, talking about, being compliant for California when it comes online, and we're working and educating in the best that we can. We're hoping to be able to participate on the Rules Committee with Lori Ajax. Ben, our president, has an application in and is actually one of the finalists. So, hopefully we would be able to participate and be ahead of the curve as well. But, it's smart to be talking about it now. It's smart to be planning, a robust product offering and talking about packaging as being a core element, not only from the branding standpoint, is that, we've seen measures here in California be proposed to block advertising or even clothing. Now, I don't think, hopefully those won't go through, but in essence, packaging could be one of the last great ways to market and brand yourself. And so a lot of this regulation is still to be determined, but it could have a big impact on our business, on the business of our clients. And so, I think the best approach right now is to be proactive, to be having these conversations, to be evaluating options, and to be ready to be dynamic and to be able to pivot and move as needed based on when some of these things actually do get finalized and come through the pipe.
That's interesting. So three different types of businesses in the cannabis industry, and if I hear you guys right, it's bring it on. Whatever the changes that lie ahead, bring them on, because it sounds like all of you are seeing this as further increasing the barriers to entry in your aspects of the industry.
Alan, may I comment
go ahead.
On something? If I may,
please,
to expand on what Derek touched on. If you're running in a regulated manner and you're following the compliance issues and you're doing, as we all are, legitimate business in a manner that is more expensive perhaps and more restrictive, and you've got that business model down, then the idea, all of us are going to benefit in the same manner. The idea that the more restrictions and more regulations that come on, that barrier to entry continues. But one of the things that Derek touched on, I think, as well, if we take advantage of this period of time before that federal regulation comes in and blesses our industry, and frankly, when we talk to investors, we're constantly presented with the Jeff Sessions issue of, are we worried about it? And our feeling is with the legitimate medical and medicinal benefits that there's too much inertia to turn that around. You've got 29 states, you've got 90% of the people voting for the medical use. I mean, we all know the statistics. With that inertia, with public perspective leading where the regulatory bodies are following, that barrier to entry provides our companies, the three of us on this call, with phenomenal opportunities. The other thing to keep in mind, as we go out, all three of us, and establish a network of, as I said, we've got over 500 retail outlets that we sell around the country, aside from the commercial shops. When those big players start to come in, Derek mentioned the opportunity to be able to discuss an M&A or some type of acquisition with the multinational players that will be entering the space when we're perhaps $20 billion instead of $5 billion on an aggregate annual basis. If you set your corporate structure up properly, we have the ability, for example, to potentially divest of one division, lighting, and keep nutrient, or divest of nutrient and keep lighting. And the reason that becomes beneficial for companies like the three of ours, when the two founders started this company 9 years ago and established a network of 500 plus stores, margins in this space were much larger than they are now. So it gets greater and more expensive. It's a more difficult task to come in new and create that network of clients that Nick has throughout the country and Derek is working towards with his clients. So as margins compress and it's more difficult for the new guys coming in to go and duplicate what we've been doing for the last, 4, 7, 8, 10 years, whatever it is, as we look in arrears, we're going to be more likely to be able to have those discussions about the potential of acquiring or working together. And at the same time, hopefully the three of us are large enough that should we choose not to go down that path, we're strong enough, solid enough, large enough to compete with the new big players coming in as well. So I'm excited about the three of us and the opportunities that we have because we all have parallel paths in that regard. And I think that's an important point that both Derek and Nick are touching on as well. So that's an important part. California is going to lead it, but it's going to filter throughout the rest of the country as well as we go forward.
Yeah, I like that, Dennis. I remember when Colorado legalized, all eyes were on Colorado, and as interesting as it's been and truly wild there, Colorado is much smaller than California. This is really this could really be the market that sets the tone for how other states move going forward. And did Nick or Derek, did you have any other responses to this part of the discussion?
Not for me. That was a great synopsis from Dennis.
Okay. Okay. I just wanted to finalize, and you guys did a good job of kind of talking about, but I want to give you one last chance if you want to talk about kind of the importance of California's changes ahead to your company and how you're positioning. And we'll start with you, Derek, and go from there.
There's not necessarily that much that we're changing. I mean, we knew this was coming down the pipeline, and I've said this publicly a handful of times. There really isn't any other industry that will tolerate, I don't care, a consumer-based industry, so retail, restaurant, food, you name it, that the consumer would essentially tolerate getting a different level of service and a different product every time they go back to the store. And I've used the coffee analogy. I order, a mocha latte in Southern California at a Starbucks. If I roll into a Starbucks in San Francisco a month later, order the same product, I have an expectation it's the same product. In our industry, that's a rarity. What happens commonplace is that you get an entirely different product. You're lucky to even get OG Kush if you ask for OG Kush. So what we're ultimately trying to bring to the industry is, like I said, that homogenized, consistent approach to retail and that homogenized, consistent approach to the wholesale of product. And survivability for us on a go-forward basis is not to be a commodity provider. We're putting a tremendous amount of energy and emphasis on our brands because push come to shove, when the big guys come in, whoever it happens to be, big ag, big tobacco, big alcohol, you name it, those that have reinforced and penetrated their brands into the common mainstream markets are going to have survivability. Survivability of whether or not they want to stand on their own or survivability of whether or not they want to merge or sell out or whatever it happens to be, you're going to have options if you've done a good job getting that brand penetration throughout the marketplace. And California is a phenomenal opportunity to get significant and broad brand penetration by a huge population base. So that's really where we're putting most of our energy, is building out a sales team to push the IVXX products throughout multiple dispensaries, to continue to grab more brick and mortar real estate, but also to look at the other ways that consumers buy. Brick and mortar is dying in a lot of industries. We don't think that's going to be the situation in our industry for a long period of time, but we don't want to ignore the other modalities that people utilize to purchase products, the Amazon type model. So the industry will begin to shift pretty rapidly to be technology-based as soon as the federal realm opens up to us and we're able to cross state lines or whatever it happens to be. So we want to make sure we're certainly positioning ourselves for that downstream. But for us, most of our emphasis is going into continuing to build out brand recognition for our Bloom retail brands and our IVX wholesale brands. If we can do a good job of doing that over the next couple years, we will have survivability at the end of the day and be able to somewhat write our own destiny when the big players come into the market.
And Nick, I know you guys did a big acquisition in California. You're moving your headquarters into a larger space, and you're getting prepared for these rules ahead. Is there anything else that you want to talk about as far as the way your company's positioning for these changes in California?
Yeah, absolutely. I think Derek made a great point about really putting an emphasis on the brand and developing long-term, in his case, consumer relationships with Terra Tech and with the brands that they offer. And I think, on our end, because we're B2B, that relationship piece is equally important. So we know that there's going to be, players that are winners, and there's going to be big-time companies really made in California, just based on the exposure and how big the market is, and the first opportunity to create, as Derek mentioned, a replicable experience for the consumer and build that brand value. And so we need to have those relationships, before it's too late. And so, we've done a good job of being a first mover in nearly every market that's opened up. And we see this as another opportunity to, become a first mover again, as this market, doesn't necessarily open up, but transitions, right? And as I mentioned, there's going to be a transition in terms of some of our core products from the dispensaries being the purchaser of those products to now the cultivators and growers being the purchaser of those products. So certainly we want to have boots on the ground developing those relationships. And so we've really revamped our sales program, created a program based on territory sales managers, bringing in a higher caliber of salesperson that can manage these relationships and really, be a value add service provider for folks that are operating in the space. So we're going to continue to focus there, and we believe long-term those relationships are going to be extremely valuable, as no matter how big of a company's balance sheet is and how big they are when they come into this industry, if ultimately we have very nice stronghold on those relationships, it's going to be very difficult to disrupt that. So we're going to double down there. We're also going to double down on products, and we know that to make our company defensible long-term, we need to continue to build out a suite of products that include products that are exclusive to Kush Bottles, that are proprietary, products that are protected through some sort of IP. We announced a patent we received earlier this year. Or products that are branded and recognizable, such as our bud gloves that are being used by cultivation facilities around the country and dispensaries alike. That is a product similar to Kleenex, right? It's not that different than another tissue, but it's built a brand recognition and value under the name, and so we're doing that as well. So there's building out our product library, building out our IP and our brand value behind those products, and then also procuring production capacity, as we know that there could be a huge onset of business, and it's hard to time because a lot of it is based on regulation. We want to be prepared and have product in stock. We've done a great job of doing that over the years and being able to pick up business where some of our smaller competitors have dropped the ball because they simply don't have the resources to be able to, number one, be close to owning their manufacturing, like we do in some instances with our contract manufacturers, where we own the tooling and we can actually control production power in that way, or simply having the resources in terms of cash to be able to carry the balances of inventory that we've consistently carried at our company. So we know with these smaller guys that are trying to compete against us, that becomes a competitive advantage for us as these guys do not have the resources and we do. So we want to be able to make sure that we're prepared with the product, production power, and having the inventory in stock, so that we're not gapping out when this big windfall business comes, and we're able to actually be the one picking up where some of our smaller competitors are dropping off. So that's a few of the other things that we're doing to really be prepared for this market.
And Dennis, I know you talked about watching the water regulations that are coming out, and obviously whatever the rules are is going to dictate. But what are some of the things that you're doing to position Solis Tech for the changes ahead in California?
Well, from a business model perspective, we're not necessarily doing anything radically different. I think our cognitive awareness of what's playing out should be as high as it's ever been, because as we've mentioned, as what happens in California in a multitude of industries, fashion industries and otherwise, rolls eastward. Not only does it roll eastward in established industries, but we've got legalization rolling eastward. And typically what happens, as we've seen, you've got one state that legalizes, the next state has one state to look at when they set their regulatory guidelines. When you have 5 states legal, the 6th state has 5 states to look at. So what we see happening in the industry is as legalization and the regulatory process unfolds in these yet to be legalized states, they're historically looking back and picking the best, or trying to anyway, picking the best aspects of the various different implementations that preceded them. California, I think, will change that a little bit. What California does, I'm anticipating, will have a greater impact and just be more sort of universally accepted as a consideration to start with as the legality rolls across the country. And you know, we're a function of how well our customers do. The more product that Nick and Derek are selling, the more product that Derek sells at that retail level, the more product that needs to be grown. So the more fertilizers that are needed, the more lights that are needed. So part of what we're hoping that we get from the California aspect is that consistent, that homogeneous, consistent approach that Nick or that Derek touched on. You know, one of the early morning shows, I was just informed, is doing a morning show. You have the host, the celebrity host on there doing a 5-minute segment each morning. It's called Red, White, and Green, and it's reaching Middle America, and it is a 5-minute segment on cannabis. We are talking to the core of this country about product on your morning shows. It's coming. But I can also share with you the recent experience where we're talking to a client and we're in a dispensary and he shows us a 1-inch by 1-inch brownie that is 5 milligrams of THC and a 1-inch by 1-inch gummy bear that is 100 milligrams of THC, and they're sitting on the same shelf. That Middle America husband and wife that goes to California on vacation or the Vegas Strip, wherever it is, and exposes themselves to the products in this industry, I've got a whole different experience if I eat 1-inch brownie and my wife eats a 1-inch gummy bear, and I'm never coming back to this industry. I won't partake again. And that works against all of us on this call. So what we want to see is that consistent approach. It probably won't come about until the federal overlay wraps over top of all the individual states. But I've said before, if I go into one state or another and I buy the same bottle of scotch or whatever the whiskey is or the liquor, 40 proof means 40 proof, 80 proof means 80 proof. We don't have that yet. And what we're hoping is that the California statutes, as they roll forward, will help bring that consistent approach. If it benefits the Dereks and the companies that are selling to the consumer, then it benefits Nick and us as well. From a pure business standpoint, Alan will review our marketing plans. The idea that there's a potential new market with the legalization in California of the 6 lights per individual is an audience that we haven't spoken to directly. Similar to what Nick said, we're evaluating our sales structure to make sure that we're in front of the relationships on the proper interval and frequency basis. But overall, the idea that we're doing anything different per se, I wouldn't suggest, but we are certainly looking at how the rollout of this legalization comes January impacts the rest of the industry, and we want to make sure we're positioned properly for that.
All right. Well, that's great. I think we've covered a lot today. I want to thank you, Nick, Dennis, and Derek, for your participation in this roundtable, which I think is the new Cannabis Ventures first roundtable, and I hope to have more of these and to include you again. For those tuning in, we had 3 companies today, 2 ancillary and 1 direct cannabis company, all based in California, doing a lot of business in California right now, including Kush Bottles on the packaging side, Solis Tek on the lighting and soon nutrient side, and Terra Tech on the cultivation and dispensing side. So thanks again, guys. I really appreciate your being a part of this.
Thanks for the forum, Alan.
Thanks, Alan.